Happy Tuesday, traders. It's 8:01 a.m. Chicago time on the 4th of February, 2020. This is episode number 1685 today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on again. The market is back on the rip up. Crude oil leading the pack higher by $1.08 from yesterday's settlement, trading at 51.19, up 2.04%. Gold taking a bit of a hit, down $18.20, trading at 1,564 on the April futures, down 1.15%. The indices are higher, led by the Euro Stocks 50 up 1.5%, the Nasdaq up 1.5%, 142 points higher. As I'm sure many of you have heard about Tesla and the crazy move that it had yesterday. The DAX, the Russell, the Dow Jones, and the S&P follow. The S&P is gapping up 41.75 points. Now that is almost that's about 80% or two-thirds to 80%, depending on the week, of a week's range right there. In the S&P 500, up 1.29%. So solidly risk on today. Buyers are coming back in, fearless, I'm sure, to take this market back. The bonds are down an entire handle and 14 ticks. One handle and 14 ticks on the U.S. bonds. The Treasury is down 19 and a half ticks. The yen is off, the Bund is off 53 ticks, and so on and so forth. So risk on sentiment overnight, and that's where we stand. The overnight session had relatively quiet news. Oil's rebounding on hopes that OPEC's going to cut. Russia signaling cooperation. I mentioned this yesterday morning in the Trader Bite that the crude is down in that big $50.70 area, which carries over from way back. And it's very, very likely that OPEC will announce or at least make a move to limit supply. The demand has been pretty steady for crude, apparently, on several measures. It's the supply side that has been the issue for prices. I'm sure you heard, you know that the State of the Union in the U.S. Is today. The State of the Union, as you might know, is is an evening where the President of the U.S. comes into the House chamber and discusses the state of the country and what he's looking to do for the year. It's interesting we're having this just a few days after his impeachment trial by that same House. So it'll be interesting to see how that plays out. Politics and TV drama at its best. Anyway, in terms of what was released overnight, uh, Great Britain had construction PMI came in stronger, 48.4 versus 45.1. And in the U.S., we're expecting IBD tip low tier number at 10 Eastern with factory orders. And then after the right at the cash close, we have vehicle sales in the U.S. And then a half hour after that at 4:30, we have API crude oil stock change. Um, and then this evening we have Caixin Services PMI out of China at 8:45. This may or may not be a mover, and that's where we stand. Real quick look at what was expected yesterday. Yesterday, the two main scenarios, given the action from the prior day and where we were opening, both scenarios were looking for a market that would have an inside day and trade sideways. Scenario one was looking for a push higher into a 57-ish before the rotation back to the open, test below, and then hold steady sideways around the open. Scenario 2, push lower towards the prior day's point of control at 25.50, and then push back up to the open and then end up sideways. In either case, we were looking for a market that was inside of the prior day's range. That's what we got. We got a completely balanced market yesterday. Here it is. It pushed definitely a lot higher than I expected. It actually had a bit of a drive on the open on the way up, and ended up pushing about 10 points through the upper boundary that I expected, but it's just a guesstimate. It pushed to 67, and then again, the expectation on scenario 1 is to push to 57. It pushed to 67, roll over, come back to the open, test below, and then hold steady at the open to give us a sideways day. And what it did is actually push to 67, hold steady, and it finished the day with a gap to the prior day's close. No test of the prior point of control, the maroon line. And we finished with an odd-ish looking profile. We had basically a flat area in a profile. When we see a flat area like this, it basically means that volume is distributed in such a way that buyers and sellers were evenly active over a range of prices before we get a peak and a drop off and clearly an excess low at the low. Yesterday's volume and market profiles didn't really show anything remarkable. Here's the market profile version of that. Really just an overlap, an inside day, as you already know, with an excess low, a very clear excess low right down here. Oh, right down here, and a weak high. We had a double TPO high yesterday, um, in the S&Ps, as you see there. The colors aren't so great, but there are two letters there at the top, with a middle distribution that is relatively flat, a very flat range here. So the point of control, according to market profile rules, is set out by Peter Stadelmeyer in 82 or 83. It chooses the most number of TPOs closest to the middle of the range. So in that, it shows the 5250 for the point of control, whereas in the market profile, it's slightly different at 48. So uh, overall, a very it's yesterday qualifies as a rest day. It sat sideways. We had a pretty decent volume, nothing tremendous. A little bit higher than what we would consider to be the norm, which is about 1 to 1.1 million contracts in the day session. And in the overnight sessions, you can see the overnight low tested below yesterday's range, and the overnight high is much higher than yesterday's range and above the MC point of control in this area up in the 83.75 area. And we're trading right near highs. Very, very bullish action. So overall, yesterday, resting day, and what we have now is a reversal pattern forming. So here's the overnight session to the moon. The overnight session, very strong trend up the entire night. Not so great for sellers, just squeezing sellers out. And you could see that the uh, point of control migration has been occurring all night long. This is a bona fide trend day up. The market is well ahead of its mid, well ahead of its VWAP, and we're coming in with a weak high on the overnight session. It is basically walking itself back to 3,300. The session is dominated by buyers, inventories long in price, and the delta is strong up. This is a relatively strong delta for an overnight session. Plus 15,000 is really strong. So there are some bargain shoppers here active, higher time frame, and this is the kind of day where you could get wasted trying to fade, trying to fade higher levels, trying to fade resistance as it forms. So be aware that the context is that we did we did push to a low. If we look back at what has happened here, let's clean this up a little bit. What has happened here is we dropped through on Friday. We consolidated through um, the last night's overnight session. We pushed higher. We pushed above the overnight session. Remember yesterday I said there was a weak high in the overnight session, and it's likely to squeeze through above there. That's why I was looking for the 57. And then it consolidated, pulled back just a tad, and then it's been taking off. This is not a market you'd want to fade to the short side today. Shorts, it doesn't mean that I would not take a short in this environment. It simply means that given, um, it just means that simply given the information that we have here, the shorts need to be very short-lived. In other words, light and tight, scalp short to see if anything develops. Be prepared to take something off the table. The recommendation has been, since the micros have been released, is to trade the micros if you have an account smaller than $25,000. Trade the micros, take 3 contracts. The recommendation is to take 3 contracts to allow yourself to peel off one for risk, the second for a target, and the third for a runner to improve our risk reward factor, our R factor. And I stick by that. So if you're taking a short here, you would want to keep those scale outs light and tight. I would not do the full 3. Do maybe 2, and then look for to scale out the off the short side somewhere around 3 points, not much more than that in the ES, and then see if it breaks to the other side. But overall, I would not recommend shorts today as a good as a good plan. I would not play the short side too much. Here's the composite again. You can see we're bouncing off the 50 SMA here. We've had a down day. We've got an inside day, and we're breaking above the inside day. This is very likely to bring itself back into the balance in the upper distribution. That's what's expected. That's the price that we're at now, the 83-ish price, and it's likely to stabilize in that area before it moves higher. This is um, it's assuming no further coronavirus information is coming. The Chinese have actually indicated that they will not delay signing the deal, the phase 1 trade deal. This is part of what may be fueling the market higher, and that's where we stand. Here's what the overnight session looks like in the heat map. This is ctbookmap.pro. You can get a trial of this. I highly recommend this with a rhythmic demo. If you need information on that, you can simply go to futurestrader71.com/contact and ask for links to the software plus a rhythmic demo. Highly recommend that feed, and we'll set you up in in this. In what we see here, what's interesting is this 3280 area had a pretty good, it carries over from yesterday that there was some liquidity there, and the liquidity got pretty heavy earlier in the session, and this push had a fair amount of volume, and there's this just massive collision that takes place. When I break this down and zoom in using Bookmap here, let's take a look at that. We see that there was just a lot of, it looks like it stops ahead of it. The liquidity there, it looks like it went away before it got there, but it really didn't. And that area remains on my field of view for the session. There's a reason why this overnight point of control is here. There was so much that traded right in here. You can see the liquidity is back in this area. Here's the market depth. You can see the liquidity sitting there. The liquidity above is at 32.90, so 32.80, 32.90. The overnight high is 88.75. This area is relatively critical. It looks like we're opening. It looks like we're opening in this region. The liquidity stacked all the way up. We don't see this often. I find it very interesting. I think the morning session, the open here, is likely to be fairly active, especially historically. The on Tuesday we get a little more volatility than on other days. So it's interesting how the market's stacked. You could see that below the liquidity in the 80s, not much there till down into the 72. Recall that yesterday's high 67 down here, prior day's high a day. Not much there. To me, it looks like it is stacked for exits, and it's likely to continue to squeeze higher. Okay, so this is what we've got. 3,300 is starting to build. If it does push through the 3,300, the target above becomes 3,303. So let's switch gears here. Running out of time. Switch gears and look at what's expected for today. Now, please take a moment and look to the left here and note that we are in this big zone here. This is day session only. And because we're in this zone, we go and build a profile around it to see where the distribution is. And it's very, very clear that we have something in the 62 to 67 area right there. We have a low volume node and we're trading this upper distribution. We do have this MC point of control coming from way back, and we are starting to work our way out of the current balance zone and into the bigger one right there. Let me extend this out to include the current area. See, that's the big point of control right there. The next dividing line up is right up here at 3,300. And that's where we're likely to end up. You can see this in the composite: low volume node, low volume node, high volume node, high volume node, high volume node, and so on and so forth. So the market is making its way really efficiently as we move higher, making its way really efficiently through these key areas, and it's now trading this big acceptance area, and it's likely to we're likely to have a pretty aggressive open, in my opinion. So here we are, opening right on top of the MC point of control, open auction out of range, looking for two-way action here, looking for the overnight inventory to rebalance, likely to munch through this 3280 area, and then eventually the squeeze once we push lower. I expect that weak high to be pushed. I'm looking for 95 consolidate, and then 3300 with a 3303 extreme up here. 3303 expected to be the top of this area, and that's scenario one. Scenario one is just dipping just enough to rebalance the overnight inventory, meaning there are people that are going to come in and they're going to see that they're up 40, 45 points from yesterday's close, and the expectation, the natural expectation, is that some of these people will take something off, if not all, or others would hedge their short call options by selling short. Well, no, they would. People would balance out their portfolio, their book, into into today's gap up, and that's why we keep track of overnight inventory. The secondaries push up, squeeze this high, push into this 95 area, consolidate into 95, 99, fall back into the open, make an attempt lower, and hold steady and finish right on top of this MCV That's the secondary. Given that we have such a big gap, we have a third and a fourth scenario. The third scenario is a drop very quick and an impulse up, looking for an open test down, drive up, and push into 3303, consolidate and squeeze through that 3303 and push even higher as we make our way through this selling day from 2 Fridays ago, and we squeeze into 3306 and '09, and that would be scenario 3. That would be a pretty strong move up, about 25 points or so. The fourth scenario, of course, is test up, unable, turn down, push to the prior high at 67, push to 62, consolidate at 62, and then squeeze down into the value area of yesterday around 55. Okay, you get the idea, hopefully. Again, it doesn't mean that this is what the market has to do. It just simply means that this is the path once it starts heading in that direction. So if we see that it's pulling back, I'm paying particular attention to 77, 77, 75, and I'm looking to get long for a push into the overnight high at 89.90, targeting 95 first, the century figure at 3,300, and then the runners would be off around 3303. That's how we use this information, okay? Good luck today. I'll catch you tomorrow. I did have some words of wisdom, but this has gone on long. This is a great setup today. So it was better to emphasize what's going on here instead of talking about something else. Good luck, and I'll catch you tomorrow. Don't forget this afternoon, by the way, I'm on Futures.io talking about trading in isolation, the pitfalls, what you can do about it. Trading in isolation, I think, makes learning to trade online is very difficult. I'll put the link in the chat box. It's also on my Twitter feed. You can find that at twitter.com/futurestrader71. You don't have to sign on to Twitter to be able to see it. Again, twitter.com/futurestrader71. Good luck.